Alright, hello and welcome to Camel Finance. I'm your boy Camel, and at the moment I'm struggling to find good memes to open with, but I did find something else that we could laugh at, so I'm just about to show you that. Before I do, let me just preface this by being responsible here and saying I do not condone meme coins. If that's your thing, then you do you, far be it from me to judge, but just so you know, this is not me telling you should buy this or suggesting that this is in any way, shape or form a good idea. I have never owned a meme coin and I likely never will, but they're fun to laugh at. And this new one I noticed is called Harry Potter Obama Sonic 10 Inu. So take that as you will. The funny thing about this is if you look at the code base, what they did was sort of hide the special NFT tax, and that NFT tax varies depending on what type of NFT you hold. So you can pay anywhere between 0 and 30% tax from holding this meme coin if you should also happen to own some NFTs. So I thought that was hilarious. And the comedy doesn't stop here because the ticker symbol for this coin is Bitcoin. And yes, I'm serious. As you can see here, Bitcoin/WBNB. So wrapped BNB token for Bitcoin. Of course, it's not real Bitcoin. Anyway, what a wild time to be alive. I can see some people are surely having a lot of fun with this. A lot of fun trolling people, taxing the NFT holders. But this is just another example of why I like to stand and observe from the sidelines. Yesterday marked the 12-year anniversary of this tweet below, where this man had said he wished he had held on to his 1700 Bitcoin at 6 cents, instead of selling them at 30, because now they're at $8. And of course, fast forward to today, this remains a $50 million reminder to hold for the long term. Over in Argentina, I've been covering Argentina for a while. They have, of course, had inflation in the triple digits. Bitcoin has hit an all-time high relative to the Argentinian peso, and in an attempt to combat the triple figure inflation, Argentina has now set its interest rates to 97%. So this is what it looks like when a central bank loses control. And as I often say, Bitcoin, gold and silver still remain the exits. Every cloud has a silver lining though. The IMF are not going to like this. Argentina is launching an introduction to Lightning course for Bitcoin. Of course, the IMF, the likes of the cartel and mafia operations, would much rather Argentina took a loan that they knew they would never be able to pay back, and thus putting the country inside the pocket of the IMF. This is what the IMF likes to do. It likes to enslave nations. And this is why the IMF has been so vocal about bashing El Salvador's Bitcoin adoption strategy. The IMF do not want more and more countries to follow in the footsteps of El Salvador, but Argentina certainly may have a backdoor here. It may have a way out of the IMF's pocket. It may be able to adopt the Bitcoin standard like El Salvador has and work towards having its own self-sovereignty. As we approach the debt ceiling talks at the end of this month, I expect the news to be flooded with debt ceiling worries, followed by possible hopes of a debt ceiling resolution. Failure to raise the debt ceiling or mint a $1 trillion coin could see freezes in things like this. A lot of people don't want to talk about this as a possibility. I don't give it a high probability just yet, but I would say it's a non-zero probability that we could see something like this over the coming months. Remember, if you don't own it, if you don't hold it in your hand, physical gold, physical silver, and Bitcoin on a cold wallet, then you may be subject to problems such as this if they were to occur. We've been talking on and off on this channel about the ordinals and congestion, and that resulting in the Bitcoin transaction fees skyrocketing to over $30 a transaction at one point. Well, did you know in the last 6 days, the average Bitcoin transaction fees have fallen by 84%. So I was saying at the time that I didn't foresee this as a long-term problem. I thought that this would just be essentially a DDoS attack on the Bitcoin network, and that the miners and the nodes wouldn't tolerate it for much longer before they started to protect their original investment and making sure that Bitcoin runs as it's intended to. One of the channel OGs, Peter, made an excellent point that I hadn't actually considered before. An unfortunate side effect of having super high transaction fees for the Bitcoin network is that it almost makes Bitcoin's main protocol unusable for those in third world countries. So if Bitcoin is going to continue to be a permissionless and inclusive form of money and payment system, then these fees are going to have to come down. And as I often say, every cloud has a silver lining. We have seen Lightning Network adoption skyrocket off the back of this. So remember, every attack on Bitcoin just makes Bitcoin stronger. All it does is point out small imperfections in the protocol that are quickly patched, and then we can move on and carry on working towards a brighter, more prosperous future. Almost 70% of the Bitcoin supply has not moved in 1 year or longer. Each previous time that this metric hit an all-time high, the price entered a parabolic bull run in the months that followed. From this metric alone, we should expect a parabola to ensue in the not too distant future. It's also worth pointing out that the Bitcoin accumulation trend score has printed a 0 for multiple consecutive days now. That means that no cohort, whether they are small or medium or large entities, are in accumulation right now. It sounds like we're in the disbelief stage of this cycle. And continuing on with this theme, if you look at the ratio of the 50 to 200 day average trading volume for Bitcoin, a ratio greater than 1 means positive sentiment, increasing trade activity, whereas a ratio sub 1 means a negative sentiment, decreasing trade activity. The current ratio sits at 0.57, which is very, very low historically speaking. If you take a look at the 12-month forward return, when this ratio is below 0.7, like it is today, the average return of the following 12 months was over 300%, and statistically not random noise. So 300% from where we are would put us somewhere in the neighborhood of 100k Bitcoin within the next 12 months. All of these things tell us to keep an open mind about better than expected outcomes walking forward. The next bullish catalyst is for the realized price to get above long-term holder RP, which is less than $800 difference as it stands, and it has always preceded parabolic advances in the Bitcoin price. Over in traditional finance, the current secular bull market, which in Jurian's view began in 2009, seems a lot like the 1949 to 68 run. By that measure, the current market is akin to the mid to late 60s timeline, and that makes sense from an inflation and a stocks bond correlation analog. So if we click into this chart here, you can see there may still be room for this market to run higher. This is not a popular view at the moment, particularly amongst retail investors. Retail investors seem very convinced that a drop has to come. Now, I'm not saying it won't, but if you've been watching this channel for a while, you know we have been posturing bullish since the lows in October of last year. Minervini sees it slightly different. He says that we are conceptually quite similar to the 1990 bottom. Now, he says that we don't have to resemble this with a final shakeout, but that final shakeout that weeds out the last of the bulls before a new uptrend really gets traction is quite possible. Here's today's price, right? This consolidation in the S&P 500. Do we have one last shakeout before we can get going to the upside? Or do we see some sort of catalyst arrive over the next days and weeks that can cause this thing to break out without first having to have the shakeout? We don't necessarily need this shakeout, since sentiment is already so bearish, as I've been showing over and over again on this channel. So here's the dollar index. As you can see, possible bull flag before I move higher into logical resistance at this downward sloping yellow resistance line. But this would not surprise me at all if we see this thing roll over before breaking down to our target at the mid 90s. Here's the S&P consolidation. So sitting right around break even out of this cycle low, still yet to confirm it with a breakout above this downward sloping purple resistance line. A break above that purple resistance line would and could be a trigger for a long if you don't have a position already. The Nasdaq's still grinding its way up slowly, isn't it? So not very exciting market to be in, but it is still trending up. So we're happy to see that. The Dow Jones still holding above these lows that we set a couple of weeks ago, a week and a half ago. The VIX still contained under this green line of support, which is now resistance, isn't it? Doesn't speak to a volatility event just yet. Of course, things can change and they can change quickly. But as it stands, I'm still not in the camp of people that thinks we're going to see a big spike just yet. FTSE 100, so far breakout retest, looking for that resumption off of this first trend line. Like I said before, the steeper the trend line, the lower the probability of success. So I'm going to play the safer option, which is this yellow trend line, if, of course, we can get a breakout. So we may be a week or two away from that. But if we can break out, expect me to tell you I've gone long. Here's Apple. So long and strong continue to push. Not much more to say about that. I don't want to see any daily closes below this upward sloping blue support line. So all the while we're above that, happy to continue to push. Here's IPX. So again, long and strong continue to push. So type 1 breakout, meaning we've had no retest. We've just broken out and gone so far. So happy days. Hopefully we can get above these highs, and then that should open up much higher numbers for IPX. And of course, Bitcoin, the bull of all bulls. So this is not the sort of strength I want to see out of a cycle low. I would like to see a big green candle here to really confirm, like we had back here. You see how we had this swing and then we had a big push off. That's what I'd like to see out of Bitcoin. Now, we haven't had that yet. Doesn't mean it can't come, but the longer that we spend without one of these big green confirmation candles, the more likely a rollover comes here. As always, in trading and investing, you get things wrong all the time. It's not about being right or wrong. It's about making money. It's about managing risk. When we made this cycle high up here, we were patiently waiting for a 60-day cycle to form for the best part of a month. So now that we've got here, all we can do, or at least all I can do, is say, well, this is what we thought would happen. Time to get long, right? We had the swing, we've had the breakout. So all we can do now is put the long on. I tweeted out yesterday and said I'd seen enough from this cycle. I want to see some follow through now, but I've added a second position and I still have the first position for Bitcoin. I also added an Ethereum long here on the basis that that's just how I trade Ethereum. If you've been on the channel before, you already know this. Once Bitcoin makes a cycle low, or at least a good candidate for a cycle low, I like to add an Ethereum position as well. That historically works pretty well for me. And I also added to my crypto related equities. So is this breakout retest resumption for Coinbase? That is to be determined. But hopefully Bitcoin, if it can follow through, should drag Coinbase up with it. I added to the MicroStrategy position. Now I'll talk about moving stops up if we can get some follow through here. Here's Riot. I also added to Riot, as you can see, stop below these lows. And I added to Marathon as well. Couple of key points to make here. First of all, if we can get some sort of strong push off here, if Bitcoin can continue, then what we'll do is we'll move this first stop up to below the second stop. And we'll do that for all of the positions. The second thing to point out here, and this is really important, is if one of these positions gets stopped out, then likely all of them will, right? Because these are all crypto related equities. They track and follow the price of Bitcoin. And if Bitcoin is going to move down and get stopped out, then likely Ethereum is as well. So a very key point to make here is if you're going to play a spread like this, instead of just put all of the position into, say, Bitcoin or Ethereum, it's important to size your trades appropriately. You must go down on the size of the positions, because if you tolerate, say, a maximum of 2% loss per stop, but then Bitcoin, Ethereum, Coinbase, MicroStrategy, Riot, Marathon all get stopped out at the same time because they're all correlated, then that becomes 2, 4, 6, 8, 10. That becomes a 12% drawdown. Okay, 12% is absolutely unacceptable. So you must size your trades down so that your total risk, if all of these trades get stopped out, is still equal to 1 to 2% of your total account. If you don't have the liquidity, if you don't have the overall size to do this, then you can always attempt to play less positions. But historically speaking, I have found this to be much more profitable than just longing or just playing the Bitcoin out of the cycle low. Typically speaking, if Bitcoin is indeed going to do what I think it's going to do, which is repeat one of these sorts of 60-day cycles out of here, if Bitcoin is going to do this, then typically speaking, I've found it to be a more profitable strategy to spread across these crypto-related equities and Ethereum as well as Bitcoin. But like I said, if you're going to take multiple positions that are all correlated, that are all in the same sector, then you must remember to size your trades appropriately. Because if one of these gets stopped out, like I said, they likely all will. So don't be having 2% stop on every single one of these positions, because otherwise you might suffer a 12% drawdown, which is completely unacceptable, of course. So as ever, one day at a time. I'm not very confident as it stands. I do want to see a big green push off of here. Something's probably going to have to catalyze that. I don't know what it would be, but if we just start to waddle sideways, then that is not a good look. And of course, if we roll over, then we're going to have to pay some stops. But that's what stops are for. As always, I'll show you every one of my positions, win, lose, draw. I'll show you every mistake if I make one. And I'll continue to try my best to uphold the highest possible standard of crypto YouTubers and online traders. So I hope you found that useful. I hope you found value here today. Make sure you hit that like button. Make sure you hit that subscribe button, turn the notifications on if you want to continue to get updates on all these markets and how I handle them in real time as a pro swing trader. In the meantime, let's see what today brings. Hopefully the market can come out of snooze mode pretty soon. I would actually rather get stopped out and see a big final flush down so that we can then get some volatility back in the market, because at the moment, I mean, this S&P 500 trade, I mean, I don't know about you, I've been falling asleep all the way through this. We've just done absolutely nothing, no trend here. So I would rather get stopped out and then draw a trend line and get ready to go again out of the cycle low, which would form down here. I would much rather that, because then we can make some money, right? All the while we're just chopping around in this washing machine. It's quite boring. Hopefully the market can come out of snooze mode. Of course, given my position, I would much rather see it come out to the upside, but I have no control over what the market's going to do. So in the meantime, take care from me. I hope you're doing well in life. All the best. Cheers. Bye.